Hey guys, I hope you're having a good day. Alright, I'm back with another video, and I'm talking about something very important when it comes to personal finance, and that is credit and your credit score. It's something that a lot of people are misinformed about, or they're confused about how it works, or some people just don't understand it, they just avoid it altogether. So that's what I want to talk today about. Hopefully, get rid of any confusion that you have. Make sure you understand how it works, because it's really, really important that you do. I promise you guys, it's not that hard and anyone can learn this stuff. So just like when I talked about interest, this is going to be a longer video, so I'm going to probably break it up into parts. So here's what I'm going to start off with. I want to give you my one-liner about what credit score is. Keep it as simple as possible. And though it may not make sense right now, as we talk about everything, we'll go back and look at the sentence again and see if it makes more sense. So let's start off. Your credit score is a number that reflects your past with loans and credit cards and general payment history, and banks use that number to determine your loan worthiness. So let's just leave it at that for right now, and we'll reevaluate at the end. So let's look at this in the beginning from a theoretical perspective. Why should you care about your credit score? How does it affect me? Credit's really only good for one or two things, so should I even bother with it at all? Truthfully, I hope every one of you guys never need to know your credit score or need to use credit ever. And why do I say that? Because it means that you will never need a loan. And that's what your credit is good for, getting loans from banks and hopefully getting it at a good interest rate. But if you have enough money to buy everything in cash, why would you need credit? You don't need a loan for anything because you're rich. You've got enough money to take care of everything. Unfortunately, that's not the case for most people, and this is why you need a credit score, okay? Because you want to be approved for these loans and you want them at good interest rates, okay? So what I would want you to do is think about your situation, kind of imagine the future, if you will, and just say, am I ever going to need to borrow money from a bank? Do I have enough money to pay for my car? Am I going to college and I can just pay for everything in cash? When it comes time for me to buy a house, do I just have enough in my savings accounts to buy everything? And if you do, then I would say congratulations, I'm very jealous of you. But if the answer is no, I'll probably need a loan, or even maybe, I would say get working on your credit now, okay? Because it's going to have a big impact on you, and quite frankly, it's so easy to do that it's foolish not to. The last time we talked about how interest works and the difference that a good rate and a bad rate can make, all right, it can total up in the thousands of dollars, and if it's your credit score that determines what your interest rate is, well, then it's pretty common knowledge that, hey, I want a good credit score so I can get a good interest rate, okay? All right, now let's get into some more specifics. So earlier, I said that your credit score is a number, okay? Now, specifically, your credit score is a number that falls somewhere between about 350 and 850. The lower the number, the lower your credit score is, and that's bad. The higher the number, the closer to 850, the better your credit score is, and that's good, okay? Now, who gives you this credit score? Truthfully, it's actually not the banks, like most people would think, but it's 3 credit bureaus, and these companies are called Experian, Equifax, and TransUnion. And these credit bureaus, they all have different formulas, and they all evaluate credit differently, so your numbers normally are not the same between all 3, but they should be pretty close together. Not every bank uses the same credit bureau, right? Let's say Bank A uses TransUnion. Bank B uses Equifax. This credit union uses all 3 credit bureaus. All right, it's different from place to place. I know that's really confusing, but truthfully it's not, and it almost doesn't matter because we want our credit score to be good with all 3 anyway. So let's get back to those numbers. So we know that 350 is bad, 850 is good. What about all the in-between stuff? Okay, before I go further, what I'm about to tell you is kind of my financial institution's guidelines on what credit tiers are. Okay, just because I tell you this doesn't mean that every bank is going to use this exact same formula, but it should serve as a good baseline. Okay, so your first tier, your worst tier is called E. All right, that's anyone whose credit score is less than 550, they're going to be in the E tier, and that is the worst tier. Next, you've got D tier, which is anything between 551 and 599. Okay, so this D and E tier, these are what we would consider bad credit, okay? Now, honestly, this is not a judgment against anybody that has a credit in this rating, okay? It's not that they're bad people because they have bad credit. It just may have meant that, something happened in the past and unfortunately It's just they've got a bad credit score because of it. All right, you can fix this, but in general, you do not want to be in these tiers. Okay. Next is going to be C tier, and it's a pretty interesting tier because it's not good credit, it's not bad credit, it's just kind of right in the middle. And in fact, for the people that don't have any credit score at all, they normally start off in the C tier right around the 600 range. But your C tier is anything between 600 and 639. So it's very important that if you're in this tier that you do things the right way. Because think about it, if you are a 600 and you get a credit card or a loan and you use it irresponsibly and you do go down just a little bit, bam, you're in D tier. You might be a 595, but hey, you're a D tier, okay? But if you do things right from the beginning and you get up to 638 or something like that, you're almost in the good credit ranges. So it's very important that you start using things responsibly from the get-go, okay? Next, let's talk about B tier, and that is anything that is 640 to 679. Next is going to be A tier credit, and this is when we start to say they have good credit, okay? So A tier is anything that is 680 to 739. And then lastly, we have the A plus tier, all right? This is the best tier. So that is anything higher than 740. This is what we want to get to, guys. A plus credit. It's going to make life so much easier. You'll get the best rates. Just let's do what we need to do to get there. So those are the credit tiers, all right? E credit, which is, anything less than 550, to A plus credit, 740 and above, all right? So what I would want you to do is, if you happen to know your credit score, take a look at it. Say, where am I at? Am I already in the A plus range? I just need to keep doing what I'm doing. Maybe you're in the D or E tier and you want to start working on it to get it back up to an A or an A plus rating, okay? It's going to be really, really important for the people that are, they're getting ready to buy loans. Maybe they're going to go have a car here in the next 2 months, 3 months or something like that, and they're right on the cusp. The difference between maybe D and C credit, it's huge. It could be 5%. You want to make sure that you've got the best credit rating possible because it has a huge impact on your loans, your interest rate, and your overall financial position, okay? All right, guys, so I'm going to stop this here and save everything from the next video. So stay tuned and we'll get the rest sorted out. Hey guys, thanks again for watching this video. I hope you learned something new from it and you were able to strengthen your financial position. I'm going to keep coming out with more videos, so please stay tuned, but go ahead and like, subscribe, comment, and have a good day.